that big reversal. A lot of people were saying the bull market is over. That's it. Get out of gold. You got to sell, especially the crypto community. I've never heard them so united against gold as they were on Friday. And they were so excited to proclaim the gold bull market dead because they said this is the beginning of the rotation out of gold into Bitcoin, which of course is more wishful thinking and a bunch of hype. Yeah, they really want people selling their gold to buy their fool's gold to kind of prop up the price because Bitcoin is not really doing anything recently. In fact, it's been in a big bear market relative to gold, collapsing by, I think, over 30% relative to the price of gold.
In today's news recap, gold extends losses near $4,100 as traders brace for renewed volatility. Gold continued to retreat on Wednesday, extending losses after its sharpest single-day sell-off in more than a decade. The metal traded around $4,100 an ounce, slipping further after Tuesday's 6% collapse, while silver steadied near $48.55, unchanged from its opening level. The correction has paused a 2-month rally that pushed gold and silver to historic peaks, driven by fears of currency debasement and expectations of major Federal Reserve rate cuts, with volatility surging and investors' repos. There's been only 2 market commentators so far highlighting that this could happen, Celente and Lobbo Tigre, while the rest of so-called analysts, brokers, and dealers were hyping it up for higher prices. The truth is gold's meteoric rise has cooled sharply, with the metal now consolidating near $4,100 following a dramatic sell-off that erased more than $250 in value since Monday. Tuesday's 6.3% plunge, the steepest intraday drop in over 12 years, marked the end of a rapid advance fueled by safe haven flows, central bank accumulation, and the so-called debasement trade. While spot prices have steadied slightly from Tuesday's lows, volatility remains elevated. 1-month implied volatility for gold options hovers near the highest level since early 2022, signaling that traders are bracing for further turbulence. Many funds are now re-hedging positions after the sell-off, using options to guard against a break below the key $4,000 support. The surge in derivatives activity follows months of record ETF inflows and aggressive physical demand from central banks dynamics that amplified both the rally and the correction. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
Andy Ross Sorkin and Mark Cuban were on talking about gold and mainly just making fun of it, right? Not taking it seriously, kind of laughing it off. In fact, it's not just the Bitcoin community that was united against gold. Pretty much everyone on Wall Street is trying to label this, a momentum play. Gold is like a meme stock. People are just buying it. They're getting carried away. There's a lot of speculation. When that's not the case, not at all. I mean, we finally got some media attention when gold got above 4,000 for the first time. But most of it was kind of skeptical as to why gold was rising and not a lot of concern being expressed as to the warning that 4,000 gold may portend. Anyway, so on Monday, following this sharp sell-off, gold rallied $120 intraday and closed up about $105 on the day. So made a new high barely from Friday and closed at its all-time record high close. I think we closed around 4,360, something like that. I mean, the highest daily close ever for gold. Silver didn't totally recover, but it still managed a nice day, closing above 4,200. closing above 52. I'm getting my numbers confused here. Closing above 52. So again, very strong, yet more negativity about gold, trying to scare people out of gold, get people to get rid of their gold or not to buy gold who might have been thinking about it. But today was the topper because this morning, gold and silver got hammered dollar-wise like I've never seen. So gold at one point was down close to $300 on the lows. Not quite. Maybe down 280-ish, something like that. We got, maybe no, 260 might have been about the low. We got just below 4,100 on gold, and we settled at about 4,125. Now, despite this 6.5% decline in the price of gold was still above 4,000. The price that gold closed today would have been a record and was a record when it got to this price last week. So all we did is crash to the record highs from earlier last week. But I think this is going to do enough damage to the psyche of some potential buyers that they're going to be scared out of this market when it rises to 5,000 and higher. That's what this type of decline does. Now, with silver, it was even more dramatic. Silver was down about $4 on the low today, closed down about 370, back below 50 at 48.70-ish. So silver wasn't able to hold 50, but gold held 4,000 like a champ. And I really think that when it comes to gold, 4,000 is the new 3,000 because gold's got real serious money buying it. And I think there's enough money to keep gold above 4,000. That doesn't mean it can't trade briefly below it like it did after it topped 3,000. You had, times where gold got a little bit below 3,000, but it was a great buying opportunity. I think the same thing will be the case with gold. If it gets below 4,000, you want to buy it, but you don't want to wait for 4,000. 4,125 is close enough, right? If 4,000 is really the new floor for gold, if you buy it 4,100, 4,200, you're getting a pretty good price. Silver, given the fact that you have more retail investors, speculators involved, is far more volatile. So it couldn't really hold 50. But I think 50 is no longer the resistance that can't be surpassed. It was a massive double top. The market has already shown it can get above 50. We got to almost 55 in silver. And now we've had a huge shakeout, and we're barely back below 50. So I think this pullback is a great pullback. If you thought you missed the silver run, and you might have when it was above 50 and off to the races, buy it now.
In today's news headlines, precious metals on a wild ride, gold and silver markets grapple with unprecedented volatility. The global financial landscape is currently gripped by an extraordinary phenomenon in the precious metals sector as gold and silver markets experience a period of unprecedented volatility. Dubbed a wild ride by market analysts, this era is characterized by historic price surges that have seen both metals reach new all-time highs, only to be swiftly followed by sharp and significant declines. This intense fluctuation presents a complex challenge for investors, demanding a reevaluation of traditional strategies and a keen eye on market dynamics as the world navigates a confluence of economic and geopolitical uncertainties. The immediate implications of this extreme volatility are profound, shaking investor confidence while simultaneously presenting unique opportunities for those agile enough to navigate the choppy waters. For individual and institutional investors alike, understanding the drivers behind these dramatic swings is paramount to safeguarding portfolios and capitalizing on emerging trends in a market that seems to redefine its boundaries daily. The past 2 years, particularly 2024 and 2025, have been nothing short of historic for gold and silver. The yellow metal's journey included breaking the $3,000 mark by mid-March 2025 and adding another $1,000 in subsequent months. Silver's trajectory has been even more dramatic, exhibiting heightened volatility characteristic of its smaller market size and dual role as both a precious and industrial metal. It reached an all-time high of $54.3775 per ounce around mid-October 2025, shattering its previous record set in 1980. Silver's rally has been astounding, surging nearly 87% since the beginning of 2025 and boasting a year-to-date gain exceeding 70%. Yet, its susceptibility to sharp declines was starkly evident when it plunged over 7% today, and it's trading below $48.40 per ounce. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps, and go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
If you haven't already done so, take advantage of the sell-off. Take advantage of the sell-off in gold too. If you need more gold, I think 4,000 again is around the floor. We're going much, much higher from here. And, you know, bull markets don't end. A lot of people are now singing, the funeral for the gold bull market. Hey, it's over, right? Gold is dead. Long live Bitcoin, whatever. You know, it's over. Bull markets that have been going on for as long as the gold bull market has, they don't end like that. If it really was over, nobody would know. It'd be very quiet. It would happen over time. It would be a slow grind, and nobody would realize that we were making a top. Because the markets don't make it that easy. They don't ring a big bell and say, aha, you see this big sharp decline. This means it's over. No, these big declines are meant to scare out the weaker players. As I've said in the past, all of the biggest moves in a bull market are down. So when you get the biggest one-day moves, they're not up, they're down because you have fear. People are afraid that the bull market is over and they bail. And probably there's no, better measure of the fear than in the gold and silver mining stocks, which were clobbered today. The GDX and GDXJ were down about, 10% on the day. But think about this. Gold set a record high yesterday. Today, the GDX is down 14.5% from its record high, with gold making a record high yesterday. The GDXJ is down 15% from its record high. I mean, we're almost in a bear market, technically, right? 20%. And in fact, all the silver stocks are in bear markets. Even though silver hit a record high last week, they're already in bear markets. They're all down more than 20% from their peaks. And if you look at individual gold stocks, right, there are several gold stocks that are down now 20% from their highs last week. So in a full bear market, just based on this one correction, gold is only down 6.5% from its record high. And all of that happened today, right? That whole thing, that whole decline today. Now, despite that, gold is still up 56% on the year. It is having a phenomenal year. But if you look at where gold stocks are trading now, they have lost all of their gains since gold was at 3,750. So the whole move from 3,750 to 4,125, gold stocks have now gone sideways. And of course, when gold was at 3,750, there were probably a lot of people that thought, well, we're not going to get to 4,000. They'll have a lot of resistance there. Little did they know that gold not only got to 4,000, it almost got to 4,500. And the fact that we've now worked off the overbought condition and we've had such a big pullback in the price of gold, yet we're still above 4,000. That is very constructive. In fact, none of this noise, right? None of the volatility of the last 3 days should even matter to gold mining stocks because they're businesses. When you're buying into a gold mining stock, right, you're buying the income stream. These companies are going to kill it in their earnings. Even with the big sell-off we've just had, gold is sold off to 4,125. Silver's sold off to 48 and change. These prices are much, much higher than they were last quarter. They far exceed any analyst estimates of what the prices were going to be. Their earnings are going to be blowout for Q3. They'll be blowout again for Q4. And look at oil prices at about $56 a barrel. Now, I don't think oil is going to stay this cheap for long. It might get a little cheaper before it takes off. But in the meantime, this is fantastic for these gold mining companies. That's about half their costs, right? Is energy, is oil. And so one of the big problems that the gold mining companies have had has been rising costs. Costs have been rising too fast compared to the price of gold and silver. Well, now the price of gold and silver is skyrocketing, and their main cost has actually come down a bit.
What do you think of today's episode? Do you believe in Peter Schiff's take that this is a great opportunity to stack more gold and silver, or are the stackers going to be the ones holding the baby as the meltdown continues? Post in the comments section your plan for gold and silver, and share with the stackers if you are taking any profits after the mega rally we experienced this year so far. Now check this video right here because it's a perfect fit for you, and I'll see you on the other side.